What's good, y'all? My name is Marc. I'm a financial wellness board member at National Debt Relief, and I'm the guy behind Better Wallet. I spent over a decade working in the financial services world as a licensed stockbroker and licensed financial advisor. These days, I make money make sense so you can finally feel in control of your finances. Why do I do this? Because I've been there before. Even while working at these Wall Street firms, making good money and helping others with their investments, I was drowning in my own debt. At one point, I had over $80,000 in debt hanging over my head. It was stressful, embarrassing, and honestly, I didn't know where to turn. But I made a decision and I got serious. I built a plan and I dug myself out of that hole. Today, I'm proud to say I'm 100% debt free and I'm on a mission to help others do the same. You might have seen me featured in Time, CNBC, or Forbes, or maybe you follow me on Better Wallet where I break down personal finances in a way that actually makes sense. Now I'm here to help you stop just surviving with money and start thriving with your money. For today's video, we're zoning in on Chapter 13 bankruptcy. You might have heard that it's known as the wage earner's plan. But there's more to it than just that. It's a powerful tool if you're in over your head and want to get relief from your debts. And in certain situations, it could be the best way forward on your journey of becoming debt-free. By the end of this video, you'll understand how Chapter 13 works, whether you qualify, and most importantly, what key factors might determine if it's really the best option for you. And I want you to stay with me because later on, I'm going to share with you some of the key insights that some people overlook when considering bankruptcy. Bankruptcy is a life-changing decision, and Chapter 13 is a unique tool that has helped many people restructure their debt while keeping the things that matter most, like your car and your home. To help you understand Chapter 13 bankruptcy better, we're going to go over how Chapter 13 bankruptcy functions as a legal process designed to help you give a fresh start, the specific debts that it can discharge, including some that you may not know are eligible for Chapter 13, but not Chapter 7. We'll also talk about who qualifies for Chapter 13 bankruptcy, the clear advantages and potential drawbacks of choosing Chapter 13, and alternatives available if Chapter 13 might not be the right one for you. Are you guys ready? Let's dive in. So you might be wondering, okay, what is Chapter 13 bankruptcy exactly? It's a legal process that lets people with a steady income restructure their debt into a more manageable payment plan, usually over 3 to 5 years. Unlike Chapter 7, which wipes out certain debts quickly, Chapter 13 gives you time to catch up and keep your assets. Here's how it generally works. You work with an attorney and a court-appointed trustee to determine one monthly payment based off of what you can actually afford. You pay it to the court-appointed trustee who splits up the payments and sends it to your creditors. Meanwhile, you keep your home, your car, and your peace of mind as long as you stick to the plan. And the cool thing about Chapter 13 bankruptcy is that if life throws you off track, like a job loss or medical emergency, you may be able to adjust the plan to fit your new situation. One powerful feature that most people often miss, Chapter 13 can sometimes discharge certain debts that Chapter 7 cannot, like some taxes or debts from property damage. So if your situation is a little bit more complex, Chapter 13 might give you a more flexible path forward. Now let's talk about who can actually file for Chapter 13 bankruptcy. To be eligible to file for Chapter 13 bankruptcy, you need to be an individual, as in you need to be a person. Businesses cannot file. You can either file yourself or jointly with your spouse. As of 2025, there are specific debt limits you have to meet. Your secured debts, which are debts backed by collateral like your home or your car, must be less than $1,580,125. I know, very specific number. And your unsecured debts, so think credit cards and medical bills, must be less than $526,700. Again, a very specific number. These limits will be active for each case filed between April 1st, 2025 and March 31st, 2028. Furthermore, you can't have filed for bankruptcy in the previous 180 days if your case was dismissed for non-compliance. You also need to have filed your state and federal tax returns for the 4 years before filing. And you must complete credit counseling within 180 days of filing, though exemptions exist for most emergencies. Understanding these requirements is key before you even consider filing for Chapter 13 bankruptcy. Your financial picture needs to align with these requirements. All right, let's break down even further with a comprehensive list of pros and cons so you can clearly weigh what Chapter 13 bankruptcy could mean for you. So here are some of the pros. You keep your property, including your home and your car, as long as you stick to the court-approved repayment plan. You get time to catch up with your payments, especially if you're behind on secured debts like mortgage payments or auto loans. Your repayment plan is custom. It's based off of your income, living expenses, and what you can realistically afford. You get protection from creditors. The so-called automatic stay kicks in once you file for bankruptcy, stopping collection calls, wage garnishments, lawsuits, and foreclosure. You can adjust the plan if life changes. If you lose your job or have to deal deal with unexpected medical bills, the court may approve a modified repayment plan. Hardship discharge is available. In very serious situations, some unsecured debts may be forgiven even if you can't complete the plan. And now onto the cons. It takes time. You're committing to a repayment plan that lasts 3 to 5 years. You must make every payment on time. Missing payments could cause your case to be discharged, and you'd lose legal protection. You'll still pay some debts in full. Things like alimony, child support, and certain tax obligations must still be paid. And it's not free. You have to cover filing fees, possible trustee fees, and attorney fees as part of the process. Because hey, everyone gotta get paid somehow. It's not a quick, fresh start compared to Chapter 7, where you can wrap it all up in maybe a few months. Chapter 13 bankruptcy requires more long-term discipline, and not to mention that it hurts your credit score too. As you can gauge by the list of pros and cons and the requirements that we talked about earlier, filing for Chapter 13 bankruptcy might be a great move in certain financial situations. However, let's be honest, Chapter 13 isn't for everyone. If you have very few assets to protect and your debt mainly consists of unsecured obligations, a quicker option like Chapter 7 might suit you better. Or if your income is unpredictable, committing to a strict repayment plan for several years can end up adding more stress to your situation. Understanding your unique financial situation is critical, and that's why it's important to look at every angle before making a decision. So what if Chapter 13 is not the right option for you? Are there any alternatives? Of course there are. Even before you decide to file for Chapter 13 bankruptcy, it's wise to explore other ways of getting rid of your debts that might help you get out of debt without such long-term commitments. One such alternative is debt settlement. In debt settlement, a debt relief company negotiates on your behalf to reduce the amount that you owe. This option works best if you have a considerable amount of unsecured debts and can accumulate enough funds for a lump sum settlement or periodic payment plans until creditors agree to a reduced figure. Do you want to know more about debt settlement? Then check out this video where I talk to you all about it. Another option is debt consolidation. This involves rolling multiple debts into a single loan with a lower interest rate, which makes your monthly payments more manageable and streamlines your repayment plan. Debt consolidation can be very effective if you have several high interest debts that are weighing you down, as it not only simplifies your payments, but also saves you money on interest over the long run. Want to know more about debt consolidation and how it can help you pay off your debt faster, cheaper, and in a more manageable way? Check out this video where I walk you through the pros and cons of debt consolidation in more detail. If you're not eligible for Chapter 13 bankruptcy due to income restrictions or other factors, you might consider Chapter 7 bankruptcy. Unlike Chapter 13 bankruptcy, Chapter 7 is quicker, often taking just a few months, but it requires you to part with any non-exempt assets. Chapter 7 could be a better option if you have primarily unsecured debts and don't have significant assets to lose. Click on this video if you want to know more about how Chapter 7 bankruptcy compares to Chapter 13 bankruptcy. Remember, you don't have to figure these options out on your own. There are plenty of different debt relief companies out there that offer free consultations and have in-house experts who can help assess your situation and guide you through the best available alternatives, be it debt settlement, consolidation, or one type of bankruptcy or another. All right, let's wrap this all up. Here's what you need to remember about Chapter 13 bankruptcy. It's designed for individuals with a steady income who want or need to reorganize their debts over 3 to 5 years. It allows you to keep your assets, like your home and your car, as long as you stick to the repayment plan, making it pretty useful if you're behind on secured debts. The process includes filing requirements, debt limits, and mandates like credit counseling. While it offers significant protection from creditors through the so-called automatic stay and the possibility of a hardship discharge, it comes with a long-term commitment and won't wipe out all your debts. If Chapter 13 doesn't seem like it's the right fit, there are alternatives like debt settlement, debt consolidation, or even Chapter 7 bankruptcy that you might qualify for. No matter where you are in your financial journey, please remember that the amount of debt doesn't define you. There are tools and options available to help you rebuild and start fresh. There's always a way out. If you're struggling with debt and looking for a solution, debt relief companies like National Debt Relief, who specialize in debt relief programs, could help you in your journey of becoming debt-free. For one, National Debt Relief has in-house debt experts who are there to help you. If you have any questions or like a free, no obligation debt relief consultation call with them, visit their website at nationaldebtrelief.com. If you happen to have any questions related to any other financial related topic, check out the other videos in the series on National Debt Relief's YouTube channel. It's our goal to make very complex financial concepts that you hear every single day. We want to make them easy so you can transform your financial life. Thanks for watching, and we'll see you on the next video.